The Mayberry Investments Limited Virtual Investor Forum has been the standard for investor education in Jamaica for decades, where top financial minds provide comprehensive insight into the market and ideal investment strategies and opportunities for our clients. Celebrating 37 years of excellence in investment banking. The Mayberry Virtual Investor Forum, investing in Jamaica.
Good evening, ladies and gentlemen. Welcome. I'm your host, Dan Theok, Senior Vice President of Investment Banking. Thank you for joining us for yet another special investor briefing, where today we'll be looking at the DOLLA Financial Group results for the year ended December 31st, 2023. On the panel, we'll be joined by Group Chief Financial Officer Trevine McKenzie and their Group CEO, Kenroy Carr. Welcome, Kenroy. Welcome, Trevine.
Hi, thanks, Dan.
Thank you.
Also joining us on the panel today will be none other than our CEO, Gary Parrott. Welcome, Gary.
Hi, thanks. Good afternoon, everybody.
Great. If you're a fan of the content, then don't forget to subscribe. Also hit the bell to stay up to date with our channel. We upload content like this just about every week. Also, if you want to embark on your very first investment journey, take that very first step with Mayberry Investments. Follow us on social media to learn more about how you can get started today. Well, DOLLA Financial are back again, and we're here today to show you what's happening with their results. Those results came out today at 1:06 p.m. on the JSE, and we are privileged to have that team here to give you first dibs on the financial results. For those of you who watch the program weekly, you know how we go. I'll take a look at the numbers, share my initial thoughts, and then we'll bring in Trevine and Kenroy to ask some tough questions. And for those of you who are out there, you know that you should send in your questions from now. In about 20 minutes or so, we will start to take some questions in from the public as well too. So without further ado, let's look at the results. Okay, and the results are spectacular as usual. Perhaps I need my glasses to see them. They're that great. Net income up by 52%. To $1 billion. The loan portfolio has grown by a whopping 65% to $2.8 billion, while all along they're keeping their expected credit losses at 3.8%. This is coming from 4.1% a year ago, and the non-performing loans are at 8.2%. Also, we've seen an improvement in the efficiency ratio to 46%, coming from 50%. So all in all, pretty good. They ended the year end with $326 million of dry powder or cash, which I'm sure Kenroy is going to deploy any minute now. And it looks like a great year with the profit up to $451 million or up by 53%. Next slide shows a little bit more details on the P&L. This year, 12-month period, unaudited versus the prior 12-month period audited. And again, as we mentioned, you can see net interest income up by 64% to $1.21 billion. Sorry, gross interest income. Net interest income up 52% to $1 billion, coming from $661 million. And so their total net interest income and other revenue grew by 56% to $989 million. To make this happen, they had a 58% increase in their operating expenses. We're up to $538 million. And so therefore, their profit before tax grew by 53% to $451 million. And their profit after tax grew by 54% to $431 million. This returns an EPS of 17 cents. Stock closed yesterday at least at $2.89. And so that shows a P of about 16.75 times, which is spot on for the junior market average, about 16 times. I think the difference here is this is a really high growth rate stock. I mean, growing their profit by 54%. And so from that point of view, I believe the stock's certainly undervalued, and we'll talk to the team to see if this is a one-off fluke or if they'll be able to continue growing this profit by 30-40% in the upcoming year. Recall this company IPO'd less than 2 years ago with a loan book at the time, which was much closer to $1 billion, just under $1 billion. And here they are, less than 2 years later, and they've grown that loan book to $2.8 billion. So spectacular performance over the last 2 financial years, growing their profit substantially, pre-IPO to now, substantial growth, and we've seen the stock price also going from $1 to 2.89, and I'm confident that this will only continue to grow. Same time on the balance sheet side, we see total assets growing by 51% to 3.4 billion. Total liability is growing by 57% to $2.4 billion. So they're borrowing debt at one rate and on lending it at a spread to grow the business. That's the basic model of Dollar Financials. They access financing from cheaper sources, and then they on lend it to their clientele and make a spread. That's what they do for a living. We see equity growing to almost $1 billion, 37% growth. I look forward to equity going past $1 billion in the next quarter. And it's all in all a pretty good story. Now we can see that the total market cap's up to $7.2 billion, which is, again, spectacular for a junior market company, and also with them tipping profits at $430 million. Next slide shows sort of the composition of their loan book. One of the things I like about their loan portfolio is you can see that it's pretty diversified by sector, good exposure across many different sectors. And then you can see also the fact that their loan portfolio is 80% secured. And then we can see that most of the loan book is also going towards commercial loans versus private loans. And this looks like 78% of your loan book is secured. Is that what that's saying, Kenroy?
No, it's actually 83%.
83%. Impressive. So 83% of the entire $2.8 billion loan book is secured, which is pretty impressive. Next slide, we'll look at sort of the quarterly profitability, and we'll definitely be talking a little bit more about this because it's showing that the last 3 quarters are appearing to be relatively flat. So in that $450 million profit, we're seeing 3 quarters relatively flat. Of course, we'll be talking about how can we get that growing, and my personal expectation is to see this run rate growing to about $125 to $130 million a quarter in the very near future. So 450 profit for the year is impressive, but we expect for the following year, analysts at Mayberry, that is, for that profit to get to at least $500 million in the upcoming year. And then the next slide shows the trading history of the stock. Stock's been trading relatively flat for the last 6 months or so. Again, this is a stock that IPO'd at $1 and ran up fairly quickly to $2.50, and then it's sort of been lingering between $2.50 and $3, and that's a 16.75 times P, as we said. But with the expected growth rate in the stock and profitability, and as they access more funding to grow their loan book, I expect to see that profit jumping to $500 million in the next year, and then to $600 plus million very shortly thereafter. And I would think, folks, this is a great stock to have in your loan portfolio. It's the fastest, largest growing microfinance lending entity in Jamaica. And by that measure, I expect this stock to be a $5 stock within 2 years. That's my expectation. And we're going to definitely be monitoring these folks to make sure they accomplish that. To declare conflicts of interest, Mayberry and its group of companies are a top 5 shareholder in Dollar Financial. So it's a business we like well, and we made a huge investment in acquiring those shares last year. And we have a partnership with Dollar Financials, Mayberry. It's our job to help them raise additional financing to continue blowing up their balance sheet. And I believe our general objective, it's a secret between us guys, is much more than $1 billion over the next 12 months. We're sure to continue growing this debt book, much more than that. So I won't say much more there. We will jump into a few questions at this point in time. Again, I want to welcome Kenroy, the group CEO, and Trevine for making themselves available, and you guys can choose who can answer which question. First question I have to ask is, what are your growth-oriented strategies which have contributed to this, great performance?
All right, so I'll take that first one, Dan. You summed up our performance so great. You have done a much better job than I would do, I'm sure, for that summary. But we're really happy about the performance of the company over the last 12 months. All of the key indicators have been trending in the right direction. We've seen where the loan quality is quite robust, and we anticipate that we will just be seeing further growth as we go forward. But in terms of the strategies, it's really about a team that I would say that their ambitions and their goals are really aligned to those of Dollar Financial Services, where we put in place a target for ourselves that is way beyond what the board would set for us as an objective, and it's just working together as a team that has really given us such great result. Our sales officers who are really engaged and motivated and doing a great job establishing relationship with businesses and providing those innovative service and solutions that we offer at Dollar Financial. And of course, our partnerships throughout the year with Optimum, with Mayberry, they would have provided funding that is really critical for the business to grow. And it's really just focusing on those strategies to ensure that we maintain a good quality loan portfolio and that we produce the best results. I would say the team is the top contributor to this result, because with everything else in place and a team that is not executing, we wouldn't have delivered these results.
Yep, thanks for that. So again, Kenroy, facts, you've grown this loan book from 1.7 billion to 2.8 billion in the last year, $1 billion growth. Can you grow this loan book by $1 billion? And you've kept the ECLs, at about 4%, right? From 4.1% to 3.8%. Can you grow this book by $1 billion in the next 12 months and still keep your ECLs at 4%?
The $1 billion in growth would be kind of a conservative target for us. Our aim is much bigger than that in terms of growth, and based on the demand that we have currently for our services, based on the pipeline of activities that we have and the funding that we expect to get over the next several quarters, I am anticipating that we will do in excess of $1 billion growth over the 12-month period during 2024.
Well, I'm definitely going to hold you accountable to that, which leads me to my next question, and get ready, Trevine. The next one after that's for you. I mean, with such a cutthroat market, how can you stay ahead of the competition and continue to increase your market share and your loan book in this way?
To answer that question, Dan, first, I must say that the market and the niche that we focus on at Dollar Financial tends to be a little bit different from our competitors. You can see that in the loan categories chart that you would have presented earlier, where 83% of our loan portfolio are to commercial, for commercial purposes. So whether it's entrepreneurs or businesses that are borrowing these, and that's kind of it's really a strategic move for us, because we find that these loans are of better quality, and we just try to be as innovative as possible to ensure that we are not just providing a product, we're not just pushing a loan on a customer, but we're actually looking at the customer's need and providing a solution that is really tailored to meet their specific needs. So it's that flexibility that Dollar offers that has led to so many persons actually coming in to us and wanting to do business with us, because we do it different from how our competitors approach it.
That makes sense. And so, Trevine, help me with that. You do it differently. Let's talk about Ultra Finance. How is that a part of doing it differently? And what's the size of Ultra relative to Dollar, so we can have a perspective?
So currently, Ultra is 30% of the entire loan portfolio. So that can give you an idea as to how much Ultra is contributing. And as at the end of December 2023, Ultra their loan book was at $800 million. So they're doing very well. Profits are also contributing just about 27% to the overall consolidated profit before tax as well. So the business is doing well. And what they have also allowed us to do was to untap the value in those customers that we're not able to lend it to as a microcredit company. And that has really helped us to expand the portfolio in such a way that you're seeing today.
And is that those customers, do you mean accredited investors? So these are different type of clientele in what sense from who you lend to on the Dollar side?
So these are high net worth individuals. And if you have gone through the Microcredit Act, a lot of persons would have not. These are persons with net worth over $50 million or with income over 10 million.
Got it. So these are not folks you could typically lend to in the Dollar business under the Microcredit Act, but Ultra Finance, which is operating a slightly different realm, can target these folks. And so it'll be larger loans, and this is where you're able to get good quality assets and so on, I would imagine.
That's correct, because it's strictly asset-based lending. So definitely good quality assets that also assist with the ECL.
Okay, good deal. Mr. Peart, you've been a bit quiet today. Any questions from you?
Well, I think it's a question that everybody, wants to ask. When you take out a Excel spreadsheet, it's you just put the exponential button and put times two or double it, and it's easy to go from one to two, two to four, four to eight. But when you have to start going from 200 to 450, which you have just done, to move from 450 to 900, is a big ask. And the question for potential shareholders and current shareholders out there, how is Kenra and Trevine going to maintain this growth rate?
All right, so I'll take that one, Dan, and then Gary and then Trevin can chip in here. So with growth and with scaling, we have to look at our operations internally to just ensure that the systems that we have in place can actually manage that level of growth. So we have in fact started, we have in fact had our strategic meeting already for 2024 and started implementing some stuff that we think are essential to ensure that we not only grow, but that at the same time, the quality of our asset, the quality of the loan portfolio, which is the most significant to us, remains robust, and that at any point in time, we can investors can maintain that confidence in the business that we do. So with scaling, we are looking at our internal processes. We're looking to be a little more efficient. I mean, when you look at the efficiency ratio for Dollar Financial at 46%, that is perhaps one of the best efficiency ratio in this industry. And we see where even though it's relatively low, we are able to be more efficient, and it's really about automating those systems and ensuring that our customers have easier access to our products or services. So we'll definitely be looking at some AI to see how that can assist us with our growth, the growth that we expect, and to ensure that we're still delivering that top tier service that our customers have, they are used to from Dollar Financial Services.
Yeah, and I would sum it up in three parts, right? The first one is funding,
Can
of
barely
course.
hear Trevine.
Yeah, the first one is funding. In terms of that, it's known that we now have our partners, Mayberry, that's there to assist us with that aspect, and that's locked. The next thing is the efficiency in systems that Penroy just mentioned. We're growing at a rapid pace, and we need to ensure that we're automating systems and ensuring that they are adequate enough to manage the capacity. And the last is people. What we have done at DOLLA is to ensure that we are aligning ourselves with like-minded persons. So when you look at our staff, we're all on the same page in terms of what we want to achieve and how we're going to achieve it. So I think those three aspects, funding, efficiency in systems, and people, is what's going to get us from point A, or from point B now to point C.
Good deal. All right. Well, I'm sold. And so, folks, I'm not going to drag out the questions. We're going to start taking questions from live media in the next 5 minutes. I really do think this is a business that can grow their loan book comfortably, by $1 billion over the next 12 months, perhaps by $2 billion, and continue to manage the NPLs, the ECLs, and improve even on the efficiency ratio. So Kenroy, just, simple math for me, if $2.8 billion loan book and you still have $326 million worth of cash to lend out, I assume that will be lent out in short order?
Very short order. I think we have, we're very close to the end of that 350 million. That would have been on the December 31st report.
Very good. So if approximately $3 billion loan book gets you to $400 million in profitability, it stands to reason if you grow your loan book by another 50%, which is $1.5 billion, your profitability will grow by at least 50% as well. Is that a fair assumption?
That is in fact a fair assumption, Dan. But just to say that we're not aiming to grow the loan book by 50%, but by 100% in 2024.
Excellent. I'm happy you said that. Gary, one more question from you before I go over to social media.
Well, the question I have, one of your largest competitors has a loan book that's about 60 to 80% larger than DOLLA. And the question is, how is it you're able to maintain your margins, because you are throwing off a much higher profit with $2.8 billion in loans than some of your competition with $5 to $6 billion in loans? How are you able to maintain that margin in such a very competitive market?
I
And
think
can you
I'll
maintain
start
it as
by
you scale?
Right. I think I'll start by saying that the model is a little bit different. So whereby our competitors are lending at longer terms, we are lending at more short terms where we're able to lend, collect, and relend. And that way we're able to see a much larger profits within the quarters going quarter on quarter. I think that's a major point in terms of how we are able to make those profits with a much smaller loan book.
Excellent.
I don't know if you want to add anything, Kenroy.
Well, just to add and support that, Trevine, the highlight earlier again about the secured loan portfolio. That's really a formula that works for Dollar Financial, because you know that the higher the rate of unsecured loans is a more provision for ECL that you have to make, and ECL is something that hits your bottom line. So the fact that a significant chunk of our portfolio is secured, it really augurs well for us in terms of the provisions that we make for ECL being lower than what our competitors would usually be booking. So they would have a higher provision for loan loss, and we would have a lower provision, and that kind of allows us to be in a better state in terms of profitability.
But that also suggests that your risk is lower. So they have a higher risk but make less money, and you have much significantly less risk and make,
And make
more
more
money.
That's correct.
That's brilliant, guys.
That is correct.
So, Trevine, I want you to tell me a little bit about the, ECLs, and some people are wondering about it, and the process that you go through for the review of your ECLs. Just in short, and then folks, so as not to be confused, because I was temporarily confused. ECLs, of course, in this context mean expected credit losses,
Not Express Catering.
not to be confused with Express Catering Limited, which has a huge bond offering coming out on Friday. So I can't help it because I'm stuck in the funding raise for Express Catering Limited. Folks, check out that prospectus. Small plug for them. But in this case, ECLs, we're talking about your expected credit losses, Trevine, which were like an amazing 3.8%. I know this isn't a figure that you just make up out your head. So can you help me out with this a little bit to give me some assurance around it?
All right. So the ECL, let's start from scratch. I like to always start from scratch. Whenever we book a loan, we are required to make an assessment for expected credit loss. And what this means is an expectation that the customer may not repay or may not repay the entire amount. The risk is higher when it is an unsecured loan and lower when it's a secured loan.
Mm-hmm.
So we benefit from having mostly secured loans, whereby the risk is less and we make less of a provision on each loan that we book that's secured. What we also do is this assessment is both done internally, but we also do this assessment externally by an expert, right? So that gives us confidence, shareholders confidence, and potential investors confidence in that we're booking an accurate ECL whenever you see the publishing of the financials.
And thank you for that. As a happy shareholder, I can say we were happy to discover this, that you actually have some independent person helping to do this assessment to give assurance to us as shareholders, the independence of this very important assessment. So thanks for that. And last one for me, Trevine, these are the unaudited numbers. When will we have the audited numbers?
The audited numbers are due on the 90-day mark, which is March 31st.
March 31st. Okay, good deal. So we look forward to that. But you guys usually have very accurate in-house numbers, so I don't expect any changes unless it gets a little bit better or something. But congratulations on those results. Okay, so over to the questions from social media, which are coming in fast and furious. First one comes in from Jerome, who's asking, has all of the funds from the $500 million DBG loan been deployed as yet? So that's the first question coming in from Jerome.
Thanks for that question, Jerome. So as of December 31st, we would have on lend $300 million of that $500 million. As the drawdown from DBJ is in tranches of $1 million. So like on a weekly basis, we
100
will draw down 100,
Of 100
million,
million.
sorry,
Yes, yes, yes.
100
Tranches
million
of 100.
on a weekly basis. So as of December 31st, we would have received an on-lend 300 million, which means that the next 200 million would have been in January of 2024.
And then he asks, how much more capital are you looking to raise? And he sort of hinted at the fact that he wants to double his loan book, or certainly grow his loan book by more than $1 billion this year. So I think that's your answer, Jerome. Philip Burgess says, congratulations on a stellar year, DOLLA. And Devon says, is DOLLA actively pursuing the Access Financial acquisition? I'm sorry, I had to read it.
No, well, I have no comment on that at this point in time. I don't think we're being aggressive in pursuit of an acquisition at the moment. It's something that we still look on as a way to grow the loan portfolio, and if the opportunity presents itself, we will definitely explore, but not something that we're pursuing at the moment.
I mean, you're able to grow your loan book by $1 and $2 billion a year. That sounds
And
like
that's organic.
the best value
Right.
for you. Philip Burgess asks, how are the plans to spin off Ultra Financier going? Seems the urgent and tax efficient thing to do.
Well, in terms of the spin-off for Ultra, we are seeing so much demand as it is now. We are maximizing on it, and then we'll be looking at expanding across Jamaica, because as it is now, we have a location in Montego Bay and we have a location in Kingston, but we're seeing where demand is coming from other areas in Jamaica. So we want to ensure that those persons in St. Thomas, in St. Anne are able to get access to the capital that Ultra has. So we're looking at doing hybrid locations or something of the sort whereby it's efficient, but customers are still able to benefit from the network.
Yeah, and Trevine, I think what Philip was suggesting is that by spin-off of Ultra, he's probably suggesting that he thinks you guys would list it in its own right for tax saving purposes. So he says, how are your plans to spin off it going, as if this was announced or something like that? So I don't know, but are you guys thinking of doing a listing of sorts in relation to Ultra Financier itself? I guess is the question.
Yeah, once
we're in
we've
evaluation mode. Yeah,
yeah
we're in evaluation mode.
Okay, you're
We're in evaluation
you're still in
mode.
evaluation mode, and if it's a prudent thing to do, you'll certainly look at it. Good deal.
Definitely.
Ian Winston, he says, read the increase in admin expenses, which are attributed to professional fees and staff costs. Are these increases related to new locations being opened? And if so, where? And I guess he's just looking for a little bit more color on the increase in your operating expenses.
The majority of the increase comes from staff costs, and what we had to do in 2023 was to increase capacity to manage the current demand and the demand that we're anticipating for 2024 and 2025. So we have done that, and we believe that staff costs are good, and we should be able to manage with the demand going forward.
Okay,
So
thanks.
just ramping up.
And any new locations opened in the last 12 months that you want to mention?
There were
No.
no new locations.
We
We
didn't.
opened Falmouth. Falmouth was the last one, and that was early 2023 or late 2022.
Yeah, Falmouth was the last one opened in February of 2023.
Okay,
Three.
In the last location.
very good. But you're increasing staff, preparing for the future growth. Okay. And Jerome seems to have some free advice here, saying Ultra should start a factoring and private credit divisions that focuses on larger loans backed by assets outside of luxury items. So there's a suggestion. Thanks for that, Jerome. I'm sure the team will think about that. And Michael Leon Fraser says, can DOLLA buy a bank? Can DOLLA buy a bank? And are they starting a bank for themselves? I hope I didn't spoil that, Michael. And when people put the little emoji thing, does that have some specific meaning, Gary? Can DOLLA buy a...
There's just an emoji of a bank.
Of a bank. Oh, I see. Forgive me, Michael, I'm challenged. Can DOLLA buy a bank? And are they starting a bank for themselves?
Well, thanks for that, Michael. We're people who think big, we dream big, and I'm sure that is something that who knows? It's something that can be in our long-term plan. Today we're focusing on building out Dollar Financial, showing what we can do in the microfinance space, and then we'll take it from there.
Good deal. And then Richard Pedler asks, Kenroy, can you explain, please, the flat profit for the last 3 quarters?
So the first Q1 we'd have seen an uptick in profit coming from the bond raise that we did through VM in 2022. So all of that funds that we'd have received and on lend, most of it during the latter part of 2022, we'd have benefited from the interest based on the reducing balance during 2023, like in Q1. Of course, we had some a little fall off in terms of disbursement due to funding in the second and third quarter, and would have seen an uptick in the last quarter based on the funding that we'd have received from Mayberry. Because what happened is that the growth in the company we'll see growth in the company whether we get funding or not. It's just how exponential that growth will be. So the funding from Mayberry in the last quarter would have allowed us to grow income to a relatively higher level than the previous quarter. But of course, the additional cost that Trevin would have alluded to earlier would have eaten away some of that interest that we would have earned in the last quarter, as well as the fact that we would have incurred some additional interest expenses based on the funds that we raised. So we're expecting now that during Q1 of 2024, we'll actually see the benefits of those disbursements that we did in the last quarter and be able to show our report and increase profitability.
Okay, very good.
And let me just put some more context into that too, Dan. We would have noticed in Q4 of 2022, we would have done record sales based on the bond that we would have done. We raised that bond in October and we lent out most of it. And income and profit went up to 102 million in Q4 of 2022. And we're seeing where we have maintained that profit in Q3, whereby it's a 102, 104, etc., which means that we have been consistent with our lending throughout Q1, 2, 3, and 4 as compared to where we were in the quarters of 2022. So it doesn't mean that there has been a fall off. It just means that we have been lending at a consistent rate in 2023 based on the incoming funding that we have also.
Very good. But by all indications, you're expecting a stepped increase in the performance for 2024. Is what both I hear Kenroy and you saying, Trevian.
Right. So we're expecting that we'll be doing more of a fundraise this year. So we're expecting sales to be increasing quarter on quarter. And with that, you'll see the increases stepping up in terms of profits.
Okay, good deal. Just 2 more questions coming in so far. Next one is from Devon. Is DOLLA planning to expand into the African market, specifically Ghana, following the footsteps of Supreme Ventures Limited?
We have no immediate plans for that at the moment. I think the focus for Dollar Financial over the next 12 months will really be on seizing on the opportunities that we see in the local market. So we'll just focus on where we know the market. We have we see the ability to grow dramatically locally, and we'll just be capitalizing and leveraging those opportunities over the next 12 months while we look at those for the medium term.
Makes sense.
Strategies.
Makes sense. And you're saying, Kenroy, based on the pipeline and what you've seen, there's a world where you could increase your loan book by up to $2 billion in the next 12 months and still maintain the quality that we're seeing in terms of ECLs, NPLs, and still hit this high objective of having 80% of your assets secured.
That's correct, Dan.
Okay, very good. I don't need to hear anything more. So, and 2 more. One comes in from Toussaint Stewart. Is DOLLA actively looking for a technology partner to support them in implementing a system to automate their processes, which will ultimately equip them to meet this increased customer demand?
Who
We're
asked
always
that
looking for opportunities.
Toussaint Stewart. Toussaint Stewart.
Yeah,
I didn't make it up.
I think we can talk, but yes, we definitely have been exploring those partnerships, and it's, as I said, it's something that's a part of our strategy for 2024. So we have in fact engaged companies to assist us with those build out.
Good deal. And the last two questions sort of around financing. And so again, Mayberry are sort of the expert partners to help Dollar raise additional funding for their business. And yes, folks, you will hear us making announcements on new and creative ways that we're going to find to ensure that we can fund this business and to ensure that they continue to grow. So there'll be lots of opportunities for those who want to invest on the fixed income side. We'll have some creative solutions. You'll hear more about that in the future. And Toussaint, you can reach out to them through me. I'll help you reach out to them. Toussaint is asking, how can I reach out to them? Gary, one more question to you as we look to wrap up. They're at very advanced stage, Toussaint, but I'll still introduce you for the sake of introducing you. Gary, I'll allow you one more question to the team, one or two if you wish.
Yeah, thanks, Dan. You know, I got a note. You know, everybody keeps saying, you know, this is going to grow. Can you put on $1 billion? Can you put on $2 billion? So the first question, Kenroy Trevine, what's your effective lending rate at this point? I need it for a simple calculation. I'm doing for somebody.
I'll take that one, Gary. So
It's just a number.
$1.2 billion interest income, $2.8 billion book.
That's less than 50%.
I get 45% by my math. I'm just the analyst.
Right. So let's use dancing. Let's not commit to it. Right? So you know, if you increase the loan book by another $1 billion, that's driving $450 million. You've already got the staffing in place. So let's say most of that cost is on the current infrastructure. So that would drive about $400 million to the bottom line. But you know, these guys are high achievers. If it's $2 billion that you add to the portfolio this year, at that interest rate, you're looking at what figure is that now? Call it 900 million. Put aside 200 of that, so 700 goes to the bottom line. Are you guys suggesting that this company could make $1 billion profit?
It's more than possible. That's I don't want to give away too much of the secret sauce and take away a little.
So the answer is that you said it's possible.
I don't. Yeah, it's definitely possible. And I mean, as I said, we have never limited ourselves to what we can achieve as a company. Everybody in the company is very ambitious, and we're driven to achieve the best result possible. And our eyes on the $1 billion for 2024.
So if that's the case, right? I mean, let's use a simple number. So you're saying the probability of doubling this profit is real. So you're looking at $450 to $900 million, right? You have what, 2.5 billion in shares?
Yeah.
So that's 900 divided by 2.5. That's 36 cents. Your current PE, you have what, 15 times?
16.
Yeah, let's use 15 times. So that's anywhere from $5 to $6.
$5.40, absolutely.
And where the stock traded today?
Closed at 289, I believe.
Hey.
289.
Yep. So I'm with you with that analysis, Gary. And, another way to look at it is I think they can easily achieve a 20% net profit margin or spread on their loan book. And so if you can get the loan book to $5 billion and make a 20% spread, that's $1 billion profit. So it's really just that easy.
So your projection is $6.
Yeah, my projection is definitely within the next 18 to 24 months. Yeah, $6, and that's assuming 15 times PE. I personally think the junior market average is going to be back up to 18 times by the end of the year.
I mean, regardless
especially for growth stocks.
Yeah, I mean, regardless of where the junior market average is, the reality is that this company is showing phenomenal growth. If they can go through a third year of double-digit growth in the high 30-40%, I mean, they did 50% last year, they did 50% for 23. Sorry, they did 50% for 22, 50% for 23. If they replicate that again for 24, a 15 times multiple is low.
Yeah, I mean, it is trading at 16.75 now. So I don't think the multiple is going to get lower. I think it's going to get higher, especially as interest rates go down. But yeah, we both agree it's a $5 stock minimum in the next.
And on top of that,
months.
they have probably one of the most aggressive dividend policies for a microfinance business. So if you're growing at that rate and still paying dividends quarterly at that rate as well, I mean, that's crazy. I mean, the question is, would shareholders be better served with, a less frequent dividend payment or even smaller dividend payment, because at these growth rates, right, the company is better served by keeping the money in the company.
Yeah, absolutely. And continuing to grow that profit. I think so. Well, I like it, and I think the trade winds are going to be in our favor with interest rates trending down, which typically means they can actually access capital cheaper and improve their spreads, believe it or not. So I think that's the case, and I really like the ultra finance business, and we had Philip Burgess, one of our astute folks, catching on to the idea that they could raise capital for that business and save taxes at the same time. So it's like a win-win.
Well, I wouldn't agree with him.
You wouldn't agree with
because
him? Okay.
if you stop and think about it, I mean, it would be if DOLLA is a mature company. The pace at which they're growing their profits, I don't think it would be ideal for existing shareholders to sell off a piece
So
of
early.
Ultra, even if it's 20%.
Mm-hmm.
You'd want to get to a point where the growth rate is slowing somewhat to normalize. If this business is growing at 50% per annum, right, you want to keep as much of that business. As an existing shareholder,
I agree.
I would want to keep as much of that business as possible until we start to see the growth rate slowing to normal levels. And you're talking about 15 or 20%.
Yeah.
I mean, at that point, you can start to think about efficiencies, etc. And if you look on the company's effective tax rate, it's still relatively low.
Oh, good points. Right, good deal. Well, folks, let me tell you, I think it was an exciting forum. I hope you guys go and do your deep dive into those financials. I think you're going to come to the same conclusion as us. It's a great company run by great management team with serious shareholders who want to see returns, who are going to support the business to ensure that they can access much needed capital to continue growing that loan book. And so when you put that all together, I think of it as a win-win-win. So still not too late to get yourself some DOLLA at $2.89, anywhere between $2.89 and $3.50. It's a steal. I think this is a good one to have in your medium to long-term bucket. It's going to be at $5 in my view in the next 12 to 18 months. I believe they can keep this growth rate going. It's the third year in a row. And despite COVID and all of the challenges, we definitely saw a level of discipline with this microfinance lender that we haven't seen, and many others. And I guess it's because, as Kenroy alluded to, 80% of their loan book is secured and focused at commercial businesses, as opposed to a lot of the microfinance guys who are doing payday loans to, consume. These guys are investing in businesses who are trying to also expand and grow. So I think it's great business, great strategy. Congratulations, Kenroy, Trevine. We will definitely have you back in the next 3 to 6 months to continue watching the story, to see how it continues to unfold. So thanks so much for being with us, guys. I really appreciate that. And with that, I'd like to bring today's discussions to an end, and I'd like to thank our viewers, as usual, for tuning in. Your support's always appreciated. And really big thanks to Trevine and for Kenroy for coming on the show so soon after releasing the results. Thanks, guys. We appreciate that. And Greg, I always appreciate your invaluable insights. I was just about to support the spinning off, but I agree with you. Why would we spin off a business that's growing at that kind of rate? So, well, folks, if you're curious about updates on our Virtual Investor Forum, then you should find us on social media, because we share live streams like this and our guests coming up on those official pages. So give us a follow to learn about all things forum related, and don't forget to subscribe to our YouTube channel, Mayberry Investments Limited, and click that bell so you can receive all future notifications. Well, remember, wise investors, slow and steady wins the race. Keep safe, everyone. Goodbye.
The Mayberry Investments Limited Virtual Investor Forum has been the standard for investor education in Jamaica for decades, where top financial minds provide comprehensive insight into the market and ideal investment strategies and opportunities for our clients. Celebrating 37 years of excellence in investment banking. The Mayberry Virtual Investor Forum, investing in Jamaica.